Welcome to our quick financial overview of Arvind Limited. In this video, we'll delve into the company's performance, valuation metrics, shareholder patterns, and investment considerations. Arvind Limited is a leading name in India's branded apparel, beauty, and footwear sectors, with a broad array of owned brands like Flying Machine and licensed global brands such as Tommy Hilfiger and Calvin Klein. Arvind serves a diverse consumer base, ranging from everyday fashion to high-end luxury. Let's take a look at Arvind Limited's key valuation metrics. Market capitalization, 10,620 crore rupees. This figure represents the total value of all outstanding shares, indicating the company's size and market value. 52-week high, low, 421 rupees per 150 rupees. This shows the highest and lowest price at which the stock has traded over the past year, highlighting its price volatility. Stock P/E ratio, 29.8. This price-to-earnings ratio suggests how much investors are willing to pay per rupee of earnings. A high P/E ratio indicates high growth expectations but could also mean the stock is overvalued. Book value, 135 rupees. This is the net asset value per share, reflecting the company's worth based on its balance sheet. Return on capital employed, ROCE, 13.10%. This metric shows how efficiently the company is using its capital to generate profits. Return on equity, ROE, 9.73%. This indicates how well the company is generating profit from its shareholders' equity. Dividend yield, 0.98%. This represents the return on investment from dividends, showing a relatively low payout to shareholders. Financial overview. Operational efficiency. Arvind Limited has demonstrated effective cost management and operational control, leading to robust financial performance. Improved profitability. The company's net profit surged from a loss in MAR 21 to 413 crore rupees in MAR 23, reflecting a strong turnaround. Reduced debt. Borrowings decreased from 2,700 crore rupees in MAR 13 to 1,448 crore rupees in MAR 24, signaling a healthier financial position with reduced leverage. Dividend payout. The company recently introduced a dividend payout of 37%, indicating a commitment to sharing profits with shareholders. P&L analysis. Revenue. Sales grew from 7,369 crore rupees in MAR 20 to 8,382 crore rupees in MAR 23. Though slightly declined to 7,738 rupees crore in MAR 24. This shows fluctuations in sales performance. Operating profit improved from 708 crore rupees in MAR 20 to 879 crore rupees in MAR 24, reflecting better operational efficiency and cost control. Net profit increased significantly to 353 crore rupees in MAR 24, highlighting improved profitability and financial health. Balance sheet highlights. Equity capital remained stable at 262 crore rupees, indicating consistency in the company's capital structure. Reserves increased to 3,281 crore rupees, reflecting retained earnings and financial strength. Borrowings reduced to 1,448 crore rupees, showing a decrease in debt levels and improved financial stability. Total assets fluctuated but recently stood at 7,245 crore rupees, representing the total value of the company's assets. Shareholding pattern. Promoters. Their stake decreased from 41.13% in MAR 24 to 39.61% in June 24, suggesting a slight reduction in their control over the company. FIIs, foreign institutional investors, increased their holdings from 15.15% to 17.54%, reflecting growing foreign interest. DIIs, domestic institutional investors, increased from 14.80% to 16.31%, indicating rising domestic institutional confidence. Public. Their share decreased from 28.92% to 26.55%, showing a slight decline in public ownership. Number of shareholders reduced from 1,99,280 to 1,88,382, which may suggest consolidation or reduced retail investor interest. Arvind Limited offers potential investment opportunities if you believe in its ability to navigate market challenges and maintain profitability. However, consider the high valuation and recent sales volatility carefully. Align these factors with your investment goals and risk tolerance before making a decision. Thank you for watching. For more updates and financial insights, subscribe to our channel and stay tuned.